Wonderful. So I think we should start. No, it's 1:02, and we have a full program actually for this session. But I would like to start first of all by thanking everyone who is here after 2 full days of the conference, and there was just the lunch. It's Friday afternoon, so highly appreciated to see you here. That's very nice. Maybe briefly, my name is Hannes. I'm co-founder of Yapo Solutions, and I'm wearing a bit two hats today in this session, as I'm also the coordinator of the Scale for Resilience initiative. And I'm joined by two wonderful panelists here. One you see to the right of me, that's Miss Tina Livingston. She's Chief Operating Officer of the CoK Sodality Credit Union in Kingston, Jamaica. And we have Luca Torre, if we can have him briefly on the screen. Luca, can you hear us?
Very well.
Can you hear us?
So, yes,
very nice.
Very well. Thank you, Hannes.
So we have Luca Torre here. He's co-CEO and co-founder of GAWA Capital. And what we actually aim to do in this session is to give you concrete insights into projects implemented on the ground. Tina Livingston will share experiences on a climate risk management system, which the credit union recently introduced. And Luca will speak about the Kuali Fund, which GAWA Capital is currently in the process of setting up. And before doing that, I would like to give you a bit of background on the Scale for Resilience initiative and what we do in order to increase adaptation and resilience to climate change in the Caribbean. So if I get the technical setup right, please, I'm sorry, but now it looks better. Can we have the full screen? Because otherwise no one will understand this graph. Okay, very nice. So giving a bit of context, we heard a lot about that climate action is needed, that it's urgent. We heard 2030 is actually tomorrow, and there's a lot of truth on it. But I just wanted to show here very briefly, and I'm not going deep into it, but 2 weeks ago, the latest UNEP gap report, climate adaptation gap report, was issued. And if you look here, you see in these, you see on the one hand side, the model costs of climate adaptation in developing countries, and you see the financing needs. And we are speaking about billions here, so it's 387 billion per year in needs and 215 billion US dollars in costs. That's what's needed for developing countries to actually implement adaptation measures properly. At the same time, you see down here this tiny red bar, which is the financing flows, which we currently see. And there's, we need to be careful here, is the public financing flows. So private finance is not shown here. However, we actually see this is the public finance from 2021, and we see a decrease of 15%. So this financing gap is widening, and actually all what we do when we go out and do adaptation finance, we're actually contributing to closing this gap, and there's a lot to be done. And this is also what we focus on with Scale for Resilience, it's an initiative which we founded in 2021 together with GAWA Capital and CGIAR. And we actually focus on providing access to adaptation finance for the most vulnerable. We do that by addressing the full financial value chain. So we unite investors, financial institutions, and also facilitators like research institutes. CIAD is one of them, for example. Yapo is another. And we focus on creating knowledge transfer and knowledge sharing activities, networking, also bringing visibility to the topic. And in the end, also focusing on establishing joint projects, initiating processes among the members. And yes, going from here, two of the key points what Scale for Resilience is actually promoting along the financial value chain is, on the one hand, the use of digital tools. Could be the Yapo platform, which you see here, which is a digital loan origination system. And why is this important? It is on the one hand side important because it provides the basis in terms of climate risks being measured for every investment. And it helps, on the other hand, to operationalize taxonomies. And we've heard a lot about taxonomies in these days. And they are very important in order to structure financial products on them. And last but not least, well, and actually in verifying, that's a crucial point, but I'll get to that, green investments, so that we can actually be sure that a loan is a green loan and that it's increasing resilience. And it provides the basis for certifications. If I have a digital system and I see the data actually where investments went, which climate solutions have been financed, and thereby resilience has been increased, then it's very easy to go to a third party and actually certify my portfolio, so that you gain the trust of investors. That is another crucial point here. And in the end, one can see it from a loan origination system. You can also say it's an MRV system, so monitoring, reporting, verification. And as said, it can be our software, it doesn't have to be our software, but what is important is to create this learning system, to have it on an ongoing basis. And that's a very, very crucial character of adaptation, and adaptation to process, resilience, the outcome, to really see over time what works, because it is always context specific, and having these data, having it captured in a digital way, helps to actually, and that's the final goal behind it, prove the business case for adaptation. Because this is what is missing so far. From that, one more time, the taxonomies. It's another crucial point. So the digital tool is one part. The taxonomy is another. We have developed one starting out actually a long time ago with the MEBA project. Back then it was just 25 items. By now we're more than 400 items, and also covering several sectors, so agri, rural communities, but also housing. We will hear a lot about that, or more detailed about that, from Tina. And these are very important to structure the financial products around. And as said, so our taxonomy is really geared towards resilience of vulnerable populations. So you have more than one dimension. So you have climate resilience, you have nature resilience, so biodiversity conservation, the effects that you have there, also health, and you have socioeconomic resilience. And all of them are important to get a holistic, a comprehensive view on the actual outcomes of the actions of what has been financed. And briefly also the reporting part, because this is also where which is crucial when we speak about the digital system. It allows to have the reporting aligned with the leading adaptation frameworks. For example, the Sharm el-Sheikh adaptation agenda, also the SDGs and others. And what we seek to is actually have an automated reporting from the members of Scale for Resilience to be able to show process and see exactly what has been reached over time. We also create visibility. I've started out with the financing gap that we have, and yeah, it's no secret that the large majority of funding goes to mitigation simply because it's more easy to do it. That's at least one of the main reasons for it. Adaptation is much more difficult. It's much more messy, one could say, to find the right way of doing it. So what we try to do is really showcasing here, it can be done. It can be done in a structured way. It can be done in a way that is scalable. And we've done so at the COPs, for example. So you see, of course, it's always nice to see President Obama, but Daisy from CEAT, she was able to meet him in a roundtable representing Scale for Resilience. Several events also at COP27. We will also be at COP28. And we created our own conference, the Resilience Finance Days. So far it was in a virtual format. One day geared towards Latin America, the other towards the Caribbean. We did this the first time this year. We're going to repeat it next year, of course. And yes, stopping with the visibility, but one thing that's dear to my heart in an activity we recently started is the Women in Resilience Finance. It has been said at the beginning, I think it was Peter from CGAP, that climate change is not gender neutral. So women are disproportionately more negatively affected by the impacts of climate change. One thing we did is, apart from creating an exclusive space for women in a virtual coffee chat, is a mentorship program. Just the first batch just went through, and it is basically targeted female mid-managers in financial institutions to equip them with the knowledge and the concepts around gender issues, around climate change, and what financial institutions can actually do about it, and therefore becoming advocates of increased adaptation and resilience finance. And we also flanked that with an implementation program to actually create the infrastructure they needed in those institutions. And that was a bit the an overview on Scale for Resilience. And now we come to the very interesting project level part, I would say, of what is happening on the ground, because this is really what it is all about. And with that, I would like to pass the word to Tina, and she will tell us a bit about the implementation of the climate risk management system.
Good afternoon, everyone. I bring you warm greetings from CoK Sodality and also from Jamaica. I'm really happy to be here today to share CoK's case and what we have done in the area of climate risk and climate change, and providing financing that can help with adaptation and resilience of our members and the wider Jamaica population. So I'm going to share what we would have done over the last 3 to 4 years and some of the outcomes that we have derived, which we find to be very exceptional, coming from a very small credit union, a small financial institution in Jamaica. So let me just give you some background in relation to CoK. We are about 56 years old. That's how long we have been in existence. And we have a membership base of over 200,000 members. In addition to that, we operate 5 branches across Jamaica, and our loan portfolio as it is right now is about $58 million. And of that amount, a small portion is in green finance. And we're proud of that based on where we are coming from. And we see the numbers increasing over time as we promote awareness and provide information on climate change and the impacts and what needs to be done to increase your adaptive capacity. So our portfolio in green financing is growing, and we are proud of that. So how we got into the space of climate change, resilience financing, green financing. In 2018, we won a bid for a project that was being financed by Global Affairs Canada, and we received technical assistance through the IDB. So the funding was put up by Global Affairs Canada, part of the funding, and also we had to put up our part of that in terms of kind. So we didn't put up cash, we put up kind. We put up cash in terms of the marketing efforts and so on that we had to undertake to promote resilience financing and green financing throughout the island of Jamaica. So that is how we got into the space in terms of climate change. And the project that we worked on was green financing for renewable energy and energy efficiency for MSMEs and low-income households. So that's a project that we actually worked on. The project actually commenced in 2019, and it ended in 2023. Now, this project at the time was the 18th being done by the Global Affairs Canada and the second in Jamaica. And this is one of the projects that have been successful based on information that I have garnered from the IDB within our region. So when we started in 2019, officially, we got hit by COVID in 2020 and 2021 thereabout. And so you know that we had to make several pivots throughout the project for it to continue and for it to deliver on the milestones which would have been set. The project looked at designing and implementing green finance products aimed at renewable energy and energy efficiency. We also had to look at how we can assess the vulnerabilities within our own CoK loan portfolio. And this is where the climate risk management system came about through our tech provider, Yapu. We also had to do our own institutional greening of our organization, because if we're in this space, we have to lead from the front. And so we also had to do that. And then a major part of the project had to do with knowledge management and communication, because in the island of Jamaica, we are faced with many climate threats. But in terms of people, especially the less vulnerable, taking action to increase their adaptive capacity and resilience, that is very low. And so in the area of communication and education and awareness, we had to spend a significant time going out into the field and trying to, educate persons on what is happening. So the products that we launched under this project during the pilot, we launched a solar panel system loan, and we also launched a loan that would provide LPG to taxi drivers who were in the micro sector. However, we had to do a pivot away from that initially because the market was not responsive to LPG. Persons didn't want to have a cylinder in the back of their cars. And so we had to go back to the IDB to make a shift. And what we said to them, we will do an unsecured loan where you put up no security for the loan of up to about $5,000, where low income, middle income, the most vulnerable could borrow that money to purchase energy efficiency products. So we launched 2 products during the pilot, the solar panel system loans and the unsecured energy resilience loan for low income persons. Now, what became interesting during this project is that the solar panel systems, remember, we're a financial institution, and so we have to accept collaterals for these loans. So the collaterals that were okay would be, if you have equity in your property, we could use that equity to secure the loan, as well as, so if you're a regular homeowner or residential member, you could use that to secure the loan. Also, if you were MSME, the Development Bank of Jamaica, they have a guarantee where they guarantee 80% of your loan. As collateral, they guarantee 80% at a very small fee. So the MSME sector would be covered for the solar panel system loan. But what we found coming from data and research is that a lot of persons who wanted the solar panel system loans, they did not have collateral, and they did not fall in the MSME sector either. And so we had to determine how could we use the solar panel systems as collateral as well. And this is where we had to meet with the insurance companies. We also had to form partnerships with the solar providers on the island so that they would refer cases to us. We say members at the credit union, it is clients as well. They would refer persons to us, we would refer persons to them. They would do the installation, the certification, and if anything happens, and we really do have to, because we're in the business of loans, we have to recover the asset, then they would be there for us. So we had to do that, and that took a long time for us to do, but we got it implemented to the point where the USAID had invited us to share some of what we would have done to bring on the solar panel system as a form of collateral for these loans. Another thing that we have been doing in terms of these loans is that for our female borrowers, we lend the loans at a lower interest rate for them, because we realize that in Jamaica, A lot of the households are led by women. A lot of the the most vulnerable are women. And so we wanted to incentivize and allow them to be part of this financial system that we are actually creating for financing of green products. So just to give you some numbers, when we started the project with the IDB, the target was set at $325,000 in terms of disbursement. That equates to about $48 million in Jamaican. We were able to disburse 291,000. And in terms of the numbers, we were supposed to have done loans amounting to 60, and we did 67. Because we're just introducing this to the Jamaican population. And so we would have done well in terms of the numbers that we would have been given and in terms of the dollar amount. And mark you, the reason why the numbers did not surpass where they closed at the end of the pilot was because of the impact of the pandemic, and credit demand really fell within the island of Jamaica. The MSME sector was hit hard. Persons were now unemployed. And so they were not taking up loans. Credit demand was really low. Since the post-pilot, we have increased the disbursement in the dollar amount by 18%, and we have increased the volumes as well by 31%. And we have also increased the percentage of our portfolio that is now in green financing as well. We have also increased the numbers in terms of gender, in terms of when you look at the female to male borrower, it shows you that more females are actually accessing these loans. And when you look at the number of indirect beneficiaries impacted, you also see where those numbers are going up. This is just a picture of us at CoK. We won an award at the Caribbean Renewable Energy Forum in April for the best energy efficient project based on the different dimensions of the project and the things that we had to undertake. Now, component 2, as I had mentioned earlier, had to do with how do we assess the vulnerabilities within our own portfolio as it relates to climate change. And this is where we implemented the climate risk management tool provided by YAPU. Now, initially when we started the project, we were just given a link where we could go onto the system and it would only give us data in terms of one parish. Jamaica has 14 parishes. We went back to the IDB to say, this is not sufficient if we're going to help anybody, or if we're going to be effective in this space. We need a tool that can do climate risk assessment on the entire island, because our members are spread across the entire island of Jamaica. And that is where YAPU, Hans, Christoph, and that team came in. And they had a very nice climate risk management system. And we went a step further with the IDB. We said, since we have some funds remaining, let us not just take the climate risk management tool, let us do an API with our own loan origination system and do an interface. So right now we have interfaced the climate risk management tool with our own loan origination system. And we are doing the climate risk assessment on members who are borrowing from us and are using their homes as collateral, or if they're taking a mortgage from the credit union. Right now, we are one of the partners with the National Housing Trust, which provides mortgages for all employees or workers within the island of Jamaica. So it doesn't matter if you're low income or high income. Once you contribute to the National Housing Trust, you're entitled to a mortgage that is affordable to you. Now, we are part of that arrangement. So you see how nicely this tool fits into what we're doing. We have started to do climate risk assessment on the houses that we're taking on as assets on our portfolio. And we are seeing the sensitivity, the exposures based on where these homes are located. So the system uses geolocations, and there are a number of questions that you have to answer in regards to the foundation, the roofing, and so on, which you get from the valuation report. And then there's additional information that we have to put in the system that our loan officers go out into the field to capture. And so it gives us a score in terms of your net climate score, but it also tells us based on the climate threats that you are faced with, based on where your property is located or your business is located, we can now say to you, we have these solutions here at CoK to make your home, to make your business more resilient, to make to increase your own adaptive capacity as well. So this is how the tool looks. This is how the report looks based on what you're seeing on the system, and you see the calculations. So if it says that your adaptive capacity to drought is low, we have different taxonomies that we have come up with that we can help you. We can provide financing for to help you to make your business and your home more resilient. And I think that is a wonderful thing. And the reception of the members and the clients we have done this assessment on so far has been very receptive. They're amazed by some of the things we are sharing with them that they would not readily know. And remember, your home is your greatest asset and you want to secure it. Your business is your greatest asset and you want to secure it. We are taking on these assets on our portfolio as collateral. So we want to make sure that these assets, can stand up to climate threat to increase our own adaptive capacity at CoK. We have also introduced a climate risk policy, which has been approved by our board of directors, and we have a climate risk committee at CoK that will do the evaluations based on the assessment of the climate risk management tool. Some of the things that we plan to do, because we know that the project has ended, but we are continuing. This was just what the project did, was to give us information and allow us to understand the space even better. And so now that we have a better understanding of the space and what is happening in relation to climate change, this is something that the credit union is going to be continuing. When we look at the climate risk assessment tool, there are so many solutions and investments that we can come up with for our members just by the data or the information that that tool gives. So one of the things we plan to do in terms of increasing our resilience is also to ensure that we continue to attract grant funding and technical assistance, because we really do need to reach the most vulnerable within Jamaica, because the poor or the socioeconomically disadvantaged in Jamaica, they are the ones who do not have access to financing. They don't have access to financing. Sometimes they can't afford it. So even though you bring awareness, and we want to continue to bring awareness and education so that they learn more about what is happening, if they have to choose between their daily lives and their expenses in comparison to taking out a loan to increase their adaptive capacity, they're going to choose to feed their children. And so one of the things that we want to do is to be able to lend these loans, these green loans, to the most vulnerable communities at much lower rates that they can actually afford to take on these loans to make themselves more resilient to the 4 climate dimensions that we face in Jamaica. Also, within the next 2 to 5 years, we want to ensure that we increase the resilience of the Jamaican population, the homeowners, the business persons as well. We want to also increase the resilience of our own loan portfolio at CoK by introducing resilience financing products and green products that will help the population. And we also want to ensure that we increase our concentration in green financing to between 3 to 5% within the next 2 to 3 years. So that is the aim. And then we expect that from there, it will gradually increase to numbers that will be much better than that. But we are starting out, and we have to set our expectations at a level that is realistic. And also, we want to ensure that we become first adopters to anything that is happening in the space of climate change, resilience financing, green financing. One of the things that we're going to be working on with the Scale for Resilience through COP2 that is coming up is looking at increasing the psychological resilience of members or clients, the people of Jamaica. Because yes, we talk about financing and green financing, but have we ever stopped to think about the psychological resilience? How do people react to climate change? How do they react to financing? And so we are going to be working with the Scale for Resilience and COP2 on a toolkit that our loan officers can now use to help to increase, the psychological resilience of our members. And we are doing that in collaboration with what is it that we're doing in the space of financial, in terms of financial literacy, and what we're doing in terms of providing green financing and resilience financing to the population. So that's basically what we have been doing at CoK. It is wide. We're not a big institution, but we are proud of what we are doing. We're actually the first financial institution on the island to have a climate risk management tool that has been interfaced with our loan origination system. And it is offering the help that it really does need to offer to the population at this time based on what we're seeing.
Well deserved, I would say. So that we heard a lot of things now. First of all, really congratulations. Honestly, I mean, of course, I'm not the, I'm slightly biased, let's put it this way. But I honestly, what you have achieved in terms of introducing the policies and procedures, introducing the taxonomy, the different elements that make up this climate risk management system, which are all important, is great. It's absolutely fantastic. We have now a short movie because it kind of, the thought was a bit, okay, now we've heard a lot of concepts and slides and numbers. Let's spend these 3 minutes to get an idea how it actually looks when what Tina has just explained. And I'll then pose a few questions afterwards. If you have questions, please indicate a bit. I will try to address everything during the time of the session. If not, we will be here after the session. But of course, we also want this to be an interactive session, so please feel free to show up. And now 3 minutes of CoK.
I have always been into environmental awareness and conservation, and it was something I always wanted to have solar panels at home, not just for the environment, but also to reduce my electricity bills. I have 4 children, and they're always in the fridge. We have fans running all the time, charging devices, watching TV. So I sought out solar panel providers, and I met Jason from SolarBuzz. He told me that CoK was there planning to begin loans for solar panels. CoK was the only organization that offered the best interest rate for solar panel loans. I was also allowed a 1% reduction in the interest rate as a female borrower. My energy bill has gone down from about $17,000 monthly, and that was about 2 years ago. So you can imagine what the bill would be like now with the increased energy costs. I am very pleased with my entire experience as a CoK customer and a member of CoK.
Hi, I'm Jason Robinson. I'm the CEO of SolarBuzz Jamaica, and we're happy to be a partner with CoK since 2021. We're working with their customers to give them the opportunity to reduce their carbon footprint, reduce their energy expenses, and also to bring resiliency to them with backup battery systems for their homes in an effort to make energy more affordable. We're also the company that did the solar system that you have seen in this video for Miss Vanessa Magoo, which is a 7.4 kilowatt hour battery lithium system. Thank you, CoK, and we look forward to doing this for many more of your clients for many more years.
My name is Howard Clark. I am a loans officer here at CoK. CoK has recently implemented a climate risk assessment tool via an API with its loan origination system. Loans granted for housing and businesses, the credit union can now assist our members with identifying climate threats and their adaptive capacity, and also provide solutions that can mitigate against these threats. and make their homes and businesses more resilient to climate change. The tool also allows us as loan officers to provide this type of assistance to the members and by extension the Jamaican population, as the credit union plays its part in building resilience towards climate change. It should be noted that CoK Sodality is the first institution in Jamaica to have this type of assessment tool, and we are very proud of the impact that this will have as we move forward with our commitment to playing our part in reducing climate threats and increasing resilience.
So I hope that made it a bit more tangible, all the different projects and numbers that have just been mentioned. Gina, now it's a bit Q&A. Let's start with with an open question. From your point of view, comparing having this climate risk assessment tool, and now, what added value did it bring from your perspective to CoK?
All right, so in terms of the added value that it has brought to CoK is that we are now better able to assist our members in terms of making their most valuable assets, resilient to the climate threats that they face. So it has brought that. It has also helped our own portfolio to become more resilient, and it continues on that path. And what it has done in terms of the climate risk tool as well is that it now allows us to introduce even more products, more green products, more resilient products to our portfolio, which is what we are actually doing at this point in time. So it is we continue to do solar panels, we continue to do unsecured loans, but we see the need to do other loans, especially for our farmers. Just recently, one of our farmers was hit by drought and he lost everything. His contract, everything. We had to give him some form of working capital support. But what he did not have, he didn't have a proper irrigation system that was connected to the main water source in his area. And so just by looking at that, we see that we can offer loans for different things to mitigate against the threats that are out there. So it has brought about some real change for us in terms of what we can do to help the society, in terms of making the society more resilient to climate change. That example speaks volumes to what we can do. And so it has brought that opportunity where we can now, when we look at it, there's about 50 different taxonomies that we could introduce, investment taxonomies that we could introduce to the market. But we are introducing new loan types to help different segments of the market. So it has brought about that level of opportunity for us as well.
And that's actually a super interesting point insofar as you started out with the solar panel loans, also the energy efficient loan. So basically 2 products, and of course different appliances. Fair enough. For CoK, housing is an important topic because mortgage loans are a large part of your portfolio. You mentioned now I think it's 55, if I'm not mistaken, of investment products which are in the taxonomy, because it's basically what you do. As said, adaptation is always context specific. So you see what a given institution actually has in its portfolio, which climate impacts are affecting it, and then you reduce these 400 item taxonomy that I mentioned. And in the case of CoK, it's now 55 items which are relevant. A lot of it is housing. And what I just would like to know is, do you feel in a position to actually do these products, these financial products, on your own?
Oh, well, we are able to do it we can do it on our own to some extent, based on the fact that we are committed to climate change. And so a part of our portfolio in terms of our budgeting is going to be geared towards, green loans, resilient loans. In terms of the most vulnerable, however, that is where I believe we're going to need assistance to be able to lend those loans at more affordable rates, because we are operating a business and we have to set the rates, even though we are a credit union and our rates are normally lower than the commercial banks. We have to set the rates in line with our central bank policy rates. We have to set the rates in line with that. And also we have to look at the risk associated with a loan. The most vulnerable sometimes are the most risky. And we have seen that even from our own micro portfolio. And so you don't want to be able to price those loans higher for the most vulnerable. You want to be able to price it so it is affordable. And in that context, that is where we may need some assistance to be able to lend those loans at very affordable rates. You know, taking into consideration that those would be considered the higher risk loans based on their livelihood and based on the method of payment that they normally use.
Yeah.
There's a
So-
question.
Please.
Okay.
Can we put it to the end of the session? Would that be fine? So please don't forget it. It's very nice. I actually wanted to do another point, but you would not need Yapo solutions. This is actually, you can do the products on your own. You don't need us.
Yes, we're able to do the products on our own at this point in time. I think all the work that we have done with Yapo during the project has set us up nicely to be able to do the loans and the introduction of the new loans to the market. We can do that on our own. We now understand the landscape. We understand what is needed. And so we can do that on our own at this point in time. When we started, we couldn't. And if we didn't have the help of Yapo, we
Fine.
couldn't. But we thank you so much, because now we're able to go off and fly on our own, you know?
And this is just, I just wanted to make the point, because this is a bit the idea behind the approach is really to create the capacities, because the financial institutions, they know very well how to do a financial product. They don't need any kind of consulting for that. It's really to get the system up and running. The rest you can do on your own. And we are basically out. Our goal is to start a process. This is the whole point that I wanted to do. And I see that time is running, to put it mildly. Please don't forget your question. We will definitely answer it. But I would now like to go to Luca, and I hope he's still there. Hey, Luca. Very good to have you. And Luca, as mentioned at the beginning, is co-CEO and co-founder of GAWA Capital. They are also co-initiator of Scale for Resilience. And you are in the process of setting up a very interesting fund, strongly focusing on adaptation and resilience. To my knowledge, the first of its kind, and we are very happy to learn more about it. Luca, floor is yours.
Thank you very much, Hannes, and apologies to
Luca,
everybody.
one second. Can we
hear
get the volume a bit up? I at least can hear it very badly, to be honest.
I don't think
assume it's the same, no, for everyone here.
I don't think it's on my side. There is nothing I can do. Can you hear me?
We can hear you.
I can try to speak louder, but
it should work. It should work. Can you? Let's see what we can do. But we can hear you.
Yeah, I could try to change the mic to the computer. Maybe that might work better.
Okay, it's fine. It's fine.
Okay.
If you speak like this, should be fine. Please.
Okay, excellent, perfect. No, thank you very much, Hannes. And I was saying I'm really sorry that I cannot be there with you today. I would have loved to attend the European Microfinance Week, but it wasn't possible, unfortunately. So I think it's the work that Yapo and CoK are doing is just fantastic, and I think you, Yapo, are the ones who are really enabling an ecosystem through a really information system, right? Without you, resilience finance would be really tough, because we wouldn't have a taxonomy, we wouldn't have the actual software to really ensure that these solutions get down to the low income. And the work that CoK is doing is also terrific, because it's implementing all the knowledge we have to ensure that the clients then become more resilient. The role of GAWA Capital, I'll also share a presentation, but our role is really to finance that kind of ecosystem, right? So, and also to try to ensure that this financing is in a form of capital to finance the portfolio of microfinance institutions, but also to finance technical assistance as well. So ensure that knowledge go through, and my understanding from what Tina said, which is again incredible work CoK is doing, has been the spark, right? The initial TA project that you got, it seems to be the spark of the whole project. Let me share. I cannot share my screen. I don't know if the technicians could help me with that. Let's say the host disabled participant screen sharing. I don't know if you can help me with that.
I see someone running here on this side. Thank you, Fernando. Can you enable this from the back? That would be wonderful.
Okay, excellent. That's it. Perfect. Okay. And I'll
Can
try
you
to
retry it? Super. Okay.
Perfect. Can you see my, I guess that you can see my screen.
Yes, we can see it.
Perfect. Excellent. Perfect. Just very quickly on GAWA Capital, you're a European impact investment management company. We manage about 200 million euros. We have done so far 70 transactions. We have a pretty good track record. But very importantly, we have been not only managing capital to invest for investment, but we'll also be managing funds for technical assistance. On the right-hand side of the slides, you see something which looks a bit complex, but I think I wanted to put it there for one reason. You cannot, I believe that you cannot finance climate adaptation, which is a very complex issue, which requires a pretty well-structured ecosystem of players. You cannot do it if you're just a traditional impact investor that invests in impact broadly. What we do, we typically, our approach, and I think is the right one to tackle at least this issue, we pick a very specific issue. In this case is the question we have, how can we help small farmers and small businesses in becoming more resilient? And then we build a theory of change. So what does it need to happen in the world, in reality, for that to happen? And then we build an investment strategy, investing in certain companies that will allow the theory of change to become through. Then the second aspect, which is more the deploy characteristic of really what we do, is that often to implement the investment strategy, and investment strategy for us, you will see it in a moment, the key word is transformation, which we believe that if we want real development, you need to transform current financial, economic, social system. And to have real transformation, just investment capital is not enough. So technical assistance is essential, as I mentioned a moment ago. So in the deployment phase, we bring both of these tools synergistically work to really maximize impact. And finally, because at the beginning of the design of the fund, we had the theory of change in mind, we really had an idea of how the complexity that we need to untangle. We have a better understanding of what the KPIs of what is that we need to measure. And as a result, we have developed and we use pretty good, I think, social performance management systems, social and environmental performance management system that allow us to really trying to understand what's working, what's not working, and tie our carried interest, so our remuneration basically, to that kind of social and environmental impact. So as I said, the problem we now with the last fund we try to solve is really climate change, is climate adaptation, right? So I won't go through. I think we all know all the horrible things that the results of climate change, which is really devastating for vulnerable communities. We believe that in order to support, I don't want to say solve the issue because this is such a complex issue, but I think to support some of these support climate adaptation and building resilience, there are two things that needs to have that we can do as investors. It is, on the one side, investing in more into climate solutions. And going back to Tina's points, for example, if you're a farmer, it's not raining, you need to install an irrigation system, you must have an irrigation system provider that you can purchase the system from, you will install it, and you will maintain it. And the kind of players needs to be further capitalized. We need many more of those. We need many more providers. So the first thing we invest in is in climate solutions. But then that farmer that needs an irrigation system typically doesn't have the money straight away, the cash to buy it. So it's extremely important the work that financial institutions like CoK do to finance those solutions. And we're aware, and I think the previous presentation explained it beautifully, for a financial institutions to finance climate solutions, so like an irrigation system, the financial institutions needs to become climate ready. So they needs to be sure that they understand the assets, like the irrigation system or the solar panels they're going to finance, that potentially they put in touch with the client, with a service provider, with somebody to buy, etc., etc., etc. So that's basically key. So our role with the solution, which I kind of anticipated already, what it is about helping creating an ecosystem, right? So here you see it on the left-hand side. You have investors which invest in a fund called Kuali Fund. In this case, these funds invest debt as well as equity in a number of different firms, and you see them there. Could be SME lending, banks, microfinance institutions, cooperatives, credit unions, but also in agri-tech and climate tech. If this ecosystem is working well and capital as well as technical assistance is needed, then the people in the middle, vulnerable communities, will thrive and will become more resilient. Well, and also these investments will hopefully make a return, and this return will go back to the fund in terms of either interest or capital gains, and then the fund will be able to provide a return to our investors. So that's really what we want to do, and with that we expect to generate financial return for our investors. What we believe it is market risk return, but also clearly social and environmental impact. This is the strategy in more details. 70% of the fund is expected to be invested in financial institutions, 30% in climate solution providers, and the instrument is 70% is senior debt, only maximum 30% in equity investments, and the geography will be 70% Latin America and 30% investments in India. And I can walk you through, if we have time, why we choose these two different regions. Or if you want to ask me more, we can connect afterwards. Here there's an explanation why, but I don't think we have much time. Now, one of the very interesting, this fund is already, this is, by the way, this is a replica. We have done already this, what I told you, but focus more on agricultural productivity for small farmers, which some of you may have heard is a fund called Uruma Fund, which is a 120 million euro fund, which was launched in 2019 and now is fully invested and has been focusing on helping farmers increasing productivity by having access to better financial and tailor-made financial services. So Uruma Fund is a reality, and Kuali is becoming a reality, and this is becoming a reality because we got a very interesting set of enabler and supporters. Specifically, the European Commission has given us 12 million euros of first loss. So the European Commission is investing in the fund and is taking more risk and the same kind of return that other investors. The Green Climate Fund is not fully approved, but will hopefully be approved by the end of February. We're at the end of a very long process. We expect to invest 25 million euros, again, of first loss. Then we have the Spanish corporation that has already invested 50 million euros of highly subsidized debt. So the first loss for looking from a private investor standpoint, the first loss reduces the risk. If the fund is going to lose money, at least I have a good chunk of that losses which are covered by those catalytic investors, the Green Climate Fund and European Commission, and the money which has been provided by the Spanish Development Agency helps increasing the return, because this is subsidized junior debt, pari passu with the investors. And with that, we expect to raise about 230 million euros from private investors, which we already have a good part of it raised. The beauty of this blended finance structure, totally 300 million, and the beauty is that really provides some interesting return for investors, but also a good, things have to get really bad for us to having investors losing money. I think I will, and we have a pretty sophisticated, I don't think we have time to go through that, but pretty sophisticated environmental and social performance management system, which relies on the theory of change we have, and with some measuring, which is primarily we're measuring is how well we're transforming financial institutions so that they can make them basically climate ready. I would just close that, I guess probably from a point that Hannes made at the beginning, showing that slide about the adaptation gap which just came up. We do need billions and billions and billions of euros to really flow into climate adaptation. And I think Scale for Resilience is doing an incredible job in raising visibility and trying to find some concrete solutions through collaboration, but we do need much more than that. So this kind of innovative financing mechanism using blended finance had to be replicated big times because they can really, I think, bring climate adaptation and resilience down at the bottom who really needs it. I'll stop here. And I don't know if you have time for questions. Happy to answer any. I think we don't have time, but it's a pleasure to meet you again, and not hesitate to contact me separately if you would like to know more about it. Thank you.
Wonderful. Thank you so much, Luca. Yes, and I'm sorry about the time constraints. Honestly, if everyone is fine, I would just go on for 5 minutes more. Otherwise, please feel free to vote with your feet. But of course, we would be happy if you'd stay and especially pose questions. Quite honestly, as said, should be interactive. If there are questions, we had one here. Before that, I would like to at least correct one thing, Luca. This session is focusing on fostering climate change in the Caribbean. You mentioned Latin America. You mentioned India. The Caribbean is also among that you. Absolutely,
and I have to say, sorry, it's good you're clarifying it. Sorry, but ask your question. I guess that I understand. I mean, thinking about your question, but go ahead. Sorry.
No, it's totally fine. I just wanted to make sure that it becomes clear that the Caribbean is also part when speaking of Latin America.
Absolutely right. In fact, it is a key region. It is a very key, important region for us, and also, interestingly enough, I think it's obvious. We know why. For the donors. So for the donors and for the catalytic capital. So for the European Commission and the Spanish government, they ask us if we can focus as much as possible on the Caribbean. So it's something which is we really would like to do.
Super. Luca, one question. I mean, you basically highlighted your investment thesis and what you're aiming to do with the fund. So I think that became clear. Since this is one of the first funds, definitely to my knowledge, that is really focusing strongly on resilience and adaptation, and has also a considerable size. What I would like to know, you also need to raise this money for the fund. Has this been difficult? How given that we need much more of this of such funds to close the financing gap, as highlighted at the beginning? Please, can you share in 1-2 sentences the experience that you had in raising that money?
Absolutely. So the key is here, right? I'm bringing it up again. I think this slide. This is the key. Blended finance really played a really important role in raising capital from private investors, and we do have among our investors, very large international institutional investors, which they want to do good. But they also want to be sure that their risk is covered, so that they really appreciate having a first loss tranche. So I think these kind of innovative financial structures are absolutely it's really key to raise capital at the scale. I would say that there is another important lesson that we've learned through the years, which is here we have an approach that basically we're investing in two things, as I mentioned before. We're investing in climate tech, but primarily we're investing in financial institutions, in microfinance institutions, where we are GAWA Capital, but also many other players out there. There is a long track record. So what we're trying to do here is not something high risk. We're investing in financial institutions that either are doing climate and want to expand their program, well, it could be with CoK, or financial institutions, microfinance institutions that are not doing it, but they really want to do it. And so we tell them, look, this is the capital and this is the technical assistance. So it's very important that, again, I think this is a very scalable approach, and that's why one of the reasons why we got interest from investors is that we're not investing in any early stage, only Africa, the most difficult place, and is kind of investments, is an asset class that investors have seen it already, understand it, and understand the concept of transformation, right? Because really what we do, we're investing in microfinance institutions that have received capital already, either from us or from other impact investors, but we want to transform them and help them to getting into the next step.
Super. Yeah. And I can only say it's very needed, and it's great to hear that this is manifesting and taking place. Arno, you have a question? So we have a question.
Thank you. Yeah. It seems like was the 300 million the target, or?
That's right. That's the target. That's a total.
Okay.
That's a
Does
total
that mean that the private investment exceeded the offer exceeded the demand?
No, not really. I mean, so of this, we haven't launched yet. We expect to launch in the first quarter. We already have a lot of soft commit. We have, as I said, European Commission and IFID, the Spanish corporation already fully confirmed. The Green Climate Fund is coming in, hopefully, touch wood, but I think we're there. And we have a number of private investors already committing capital. No, the total amount that we aim to raise is 300 million. If you see there 213 is just the sum, because we wanted to get to a rounded number. So no, there has not been exceeding. But I have to say something though, that in the previous fund, which had Uruma, had a very similar structure with the first loss and subsidized debt. In fact, was the same structure, was smaller. This structure we had, this blended finance structure we had, was so attractive that we could, if we wanted to, go beyond the 120 million targets that we had. Now, I'm elaborating a bit more on your question. What we cannot do that. Why? Because the investors are investing knowing that there will be only 213 million of private investors, and they know that there is 37 million euros of first loss. If we raise much more private investors than what we tell them, then the de-risking component, the proportion of first loss versus the money that the private investor put would be smaller, and so they would have less protection than what they expected when they invested, right? So we cannot go beyond what we were telling investors. I hope I answered your question.
I think that answers thoroughly, no? Yes, please, finally.
I'll be quick. Thank you for the presentation, and I'm also from Jamaica, so it was really nice to see a case from the Caribbean because we are among the most vulnerable to climate change, and you
Absolutely.
hardly see us in these climate finance events. And I have a comment and a question. My comment is, it's very obvious to me why the products, these green loans that are financing solar panels, can be considered adaptation. But I think in the climate finance space, we make this strict distinction between what is mitigation, what is adaptation, which sometimes is nonsense because it's so context specific. And maybe what was missing for another audience who's not familiar with the context is why having access to solar electricity is adaptation. Because when a hurricane comes, the first thing that people lose is their light. And how can they operate their business? How can they keep their food refrigerated? How can they continue their livelihood if they don't have electricity? So it's not about just reducing carbon footprint. It's about keeping the lights on. It's about continuing life. So I think I have a lot of questions about the taxonomies that we use and the terms that we categorize certain climate as mitigation, adaptation. But I had a question about the climate risk assessment that you do for your clients now in the loan origination. I wonder, is there no risk that this will further discriminate against persons who already live in the most vulnerable places or their houses are in vulnerable places? How are you incorporating that into their, when they come for a loan? You know, I know you're going to offer them products to compensate and to increase their resilience, but then, yeah, that's my question.
That's a good question. So we know we use your credit score to determine whether you'll get a loan or not. How we're using the climate risk management tool is to provide assistance to our members. We're not using the results to turn down a loan. So that has been set, unless where that property or that business is located is really, really in an area that is prone, like for example, prone to flooding, and we just really can't accept that asset as collateral. But we're not using it for that. We're using it to help to increase the adaptive capacity of our members and to make them more resilient. You spoke about mitigation. Yes, mitigation is addressing the problem as it is and trying to fix it. But when you increase someone's adaptive capacity, you're giving them, you know, access to something that will not only help them now in the current, but in the future as well. So we're using the tool to help our members. We're not using it as though you'd use a credit risk tool to say, boy, you have bad credit, so we can't. What we're trying to do is to improve that asset that you own and also to improve that asset that we're going to take on as collateral. So it's not being used to make a decision as to whether we approve or decline a loan, unless it is in an extremely bad area and we really have to make a decision, but that is very rare. Sure. Okay.
Can we one more question? This is the last question. And it's a very good point. Yeah. Yeah.
You know, I have been in projects in the past, my previous life, where assessment of solar panels is assessed on an economical basis. Right? The return of the project itself on a capex perspective. So I just wonder how, you know, if, for example, if you have a very small farmer, sometimes it becomes economically more difficult to install an irrigation system. So I just want to understand how that differs from a traditional commercial banking type of loan, capex loan.
It doesn't really differ in that sense, but it also includes the other dimensions. Of course, if you look now at the solar panel loans, if there's no collateral in that sense, you know, if there's for the MSME loans, of course, that changes the picture. So you create favorable terms because it's geared towards particularly vulnerable populations, and you also the institution has an interest in order to get a more resilient portfolio to also reach the numbers and support the takeoff of the loan. So, but in general, it works like a normal loan. There's no no difference. And happy to dive a bit more on the details then on how you include the climate part, but it's normal. Yeah. That's also a very good point with there's a lot of overlap between adaptation and mitigation, but that would be too much now, I guess, in terms of timing. So thank you, everyone. Yes, we're coming to an end. Sorry for stretching your time. By the way, Scale for Resilience is an inclusive community of practice. If you want to join, just talk to us. Very happy about new members. Thank you. And thank you, Luca.
Thank you very much.
Sorry, this is.
Bye
Ciao,
bye.
ciao. We speak later.
Bye bye.